What is happening, crypto fans, and welcome back to Bitcoin Bulletin, your premier source for the most electrifying updates in the world of digital assets. The news cycle is moving at warp speed, and today, we've got a batch of stories that are absolutely going to blow your mind. Get ready for a deep dive into the hidden signals within Bitcoin's massive daily transaction volume, a surprising exploration of how Bitcoin is merging with the craft beer scene, a fascinating chat with AI about getting rich, and a massive sovereign bet that's shaking up the entire market. You are not going to want to miss a single second of this. Let's get straight into it. First up, we're dissecting the surprising dynamics within Bitcoin's daily transactions. We're talking about a massive 439,000 transactions every single day, but here's the kicker. The actual value being transferred is starting to tell a different story, with price movements outstripping on-chain values. What does this mean? Are big players making moves off-chain, or is something even more profound happening beneath the surface? We're diving deep into the hidden signals that could redefine how we understand Bitcoin's market mechanics. Next, prepare for a crossover event you never saw coming. We're heading to the craft beer frontier to explore the unexpected parallels between the world of artisanal brews and the revolutionary power of Bitcoin. From challenging established industries to fostering community innovation, this story uncovers how these two seemingly different worlds are actually shaping the future. We'll look at brewing history, consumer trends, and how this unique fusion is creating new opportunities. Then we're putting artificial intelligence to the ultimate test. We asked Grok, the AI known for its unfiltered takes, the million-dollar question: how do you get rich off Bitcoin? Get ready for some unconventional strategies, high-risk, high-reward tactics, and insights that go way beyond your typical financial advice. Is leveraging debt the key, or is it about diving into the ecosystem itself? Grok's answers might surprise you, but remember, this is for informational purposes. Always do your own research. And finally, we've got a jaw-dropping revelation from the other side of the globe. On-chain spies have uncovered a massive sovereign bet: the UAE's staggering $700 million stake in Bitcoin. This isn't just a big investment. It's potentially the first public disclosure of sovereign-linked crypto assets, and it could be a game-changer for how nations view Bitcoin as a hedge against economic uncertainty. We're breaking down exactly what this means for the global market and institutional adoption. You don't want to miss this deep dive. Stick around, because the Bitcoin Bulletin is just getting started. Make sure you smash that like button, subscribe for more, and ring that notification bell so you never miss an update. The transaction puzzle: Bitcoin's daily activity explained. Beneath the surface of Bitcoin's bustling digital economy lies a fascinating puzzle. While the network processes an astonishing 439,000 transactions daily, the actual value being transferred appears to be diverging from the price action. This intriguing discrepancy suggests that the sheer volume of daily transactions might not be telling the full story about the economic activity occurring on the Bitcoin blockchain. For months, analysts have observed a trend where the price of Bitcoin has been moving with a momentum that seems to outpace the on-chain transfer values. This means that even when the total value of Bitcoin being moved from one wallet to another is lower, the market price is still climbing or holding strong. This phenomenon has led to much speculation about what could be driving these market movements. One prominent theory suggests that a significant portion of Bitcoin trading and value transfer might be happening off-chain. This could involve large institutions and sophisticated traders utilizing private, over-the-counter, OTC deals, or utilizing secondary market platforms that don't immediately reflect on the public blockchain. These methods allow for the movement of large sums of Bitcoin without impacting the on-chain data in real time, thus explaining why the number of transactions might remain high while the on-chain value fluctuates differently. Another possibility is the increasing role of concentrated buyers, often referred to as whales, who may be accumulating or distributing Bitcoin in ways that are not immediately apparent through standard on-chain analysis. These large holders can significantly influence market prices through their actions, and their transactions might be structured to minimize on-chain visibility. The sheer volume of daily transactions, while impressive, could also be attributed to a higher frequency of smaller, more routine transfers, including those related to payments, remittances, or even microtransactions, which contribute to the overall daily count but don't necessarily represent massive capital inflows or outflows. The falling trend in big trades, typically defined as transactions exceeding a certain large threshold, further adds to this mystery. If fewer large value transactions are occurring on-chain, but the price is still appreciating, it strongly indicates that the primary drivers of price discovery are either happening away from the public ledger or are being influenced by factors not directly captured by the raw transaction value alone. This could include the impact of Bitcoin ETFs, which facilitate large capital flows into the market without necessarily showing up as individual large on-chain transfers from the ETF providers themselves. Instead, they might aggregate these movements or utilize custodian services that manage the underlying Bitcoin in a way that obscures individual transaction data. This situation presents a complex picture for investors and analysts trying to gauge the true health and momentum of the Bitcoin network. While the high number of daily transactions points to ongoing network activity and adoption, the divergence between price and on-chain value suggests a more nuanced market dynamic. It forces a reevaluation of how we interpret on-chain data, emphasizing the need for more sophisticated analytical tools that can account for off-chain activities and the complex strategies employed by major market participants. The hidden signals within Bitcoin's transaction data are not just technical details. They are crucial indicators of market sentiment, institutional behavior, and the evolving landscape of digital asset finance. But what if the story of Bitcoin's impact extends beyond just financial markets and into unexpected cultural spheres? We're about to find out. Next, we're diving into the surprising intersection of digital currency and the craft beer revolution. From digital gold to craft brews, Bitcoin's unexpected frontier. The world of finance is constantly evolving, and few innovations have captured the public imagination quite like Bitcoin. Simultaneously, the beverage industry has seen a similar revolution with the rise of craft beer. While seemingly disparate, these two movements share a spirit of innovation, disruption, and a growing appeal to discerning consumers. This exploration delves into how Bitcoin's influence is extending into traditional industries, using the craft beer scene as a unique case study, and offering insights into how these powerful trends are reshaping our economies and cultures. Bitcoin, often dubbed digital gold, derives its value not from a central authority, but from a decentralized network and a collective agreement on its scarcity and utility. With a current price of $118,003.9, its worth is intrinsically tied to the confidence and participation of its traders. Unlike traditional currencies backed by governments, Bitcoin's value is purely data-driven, relying on the consensus mechanisms of its network. Its supply is capped at a finite 21 million units, a scarcity that inherently supports its value appreciation over time. Furthermore, external events and public perception play a significant role swaying market sentiment and influencing buy-sell decisions. The current landscape of Bitcoin adoption is heavily influenced by institutional buying. Corporations have emerged as the leading purchasers this year, significantly outpacing ETFs and individual retail investors. Financial firms, in particular, are driving this trend, with Michael Saylor's MicroStrategy leading the charge by accounting for 77% of corporate Bitcoin growth, holding an impressive 157,000 BTC valued at over $16 billion. This corporate embrace isn't limited to the financial sector. Various industries are recognizing Bitcoin's importance. While ETFs have added 49,000 BTC and governments have acquired 19,000 BTC, retail traders have seen a net outflow of 247,000 BTC. Overall, business ownership of Bitcoin has surged by 154% since the start of 2024, with finance leading at 35.7%, followed by tech, 16.8%, and consulting, 16.5%. New entrants like Rumble, Mingxiang, and HK Asia Holdings further underscore this growing interest. This collective accumulation puts pressure on Bitcoin's finite supply, especially as miners produce only about 450 new coins daily. The rate at which major entities like MicroStrategy acquire Bitcoin now exceeds the rate of new supply creation, leading some, like Adam Livingston, to describe it as a synthetic halving and contributing to a negative annual deflationary rate. In a fascinating development, Heritage Distilling Company, based in Gig Harbor, Washington, has become one of the first craft businesses to officially adopt Bitcoin. Their board has approved a policy to accept Bitcoin as payment and hold it as a company asset, a move spearheaded by their technology committee led by Matt Swan. This decision reflects a broader trend of recognizing Bitcoin's potential not just as a transactional tool, but as a long-term asset. The recent Financial Accounting Standards Board (FASB) policy, which allows companies to value intangible assets like Bitcoin more accurately, has significantly eased the path for such adoptions. This regulatory clarity helps businesses manage the inherent price volatility of Bitcoin, providing a more stable framework for its integration into financial statements. Heritage Distilling's CEO, Justin Stiefel, highlights the unique advantage their business model offers in adopting Bitcoin. Unlike traditional investors who might face immediate financial repercussions from price swings, Heritage Distilling, as a producer of physical goods, can utilize their product margins as a buffer. This allows them to absorb short-term Bitcoin price dips without significantly impacting their operational stability or profitability. This strategic positioning not only mitigates risk, but also opens up new avenues for customer acquisition, particularly targeting the growing community of digital asset enthusiasts. By accepting Bitcoin, the company aims to streamline transactions and tap into a unique customer base that values digital innovation. This forward-thinking approach by Heritage Distilling exemplifies how businesses can leverage digital assets. By accepting Bitcoin as payment and holding it as an asset, they are not only simplifying transactions for a segment of their customer base, but also positioning themselves as innovators in the craft industry. This move could serve as a blueprint for other businesses, particularly in the craft beverage sector, to explore the benefits of digital currency adoption. It underscores the pervasive nature of innovation, demonstrating how embracing new technologies like Bitcoin can lead to significant strategic advantages and market differentiation. But how are the most advanced AIs interpreting the path to wealth in this new digital landscape? Prepare for some unfiltered advice as we ask Grok how to get rich off Bitcoin. AI's blueprint for Bitcoin riches, Grok's unfiltered take. In the quest for financial prosperity, many turn to Bitcoin, drawn by its potential for significant returns. But what are the real strategies, beyond the mainstream advice, that could lead to wealth in the cryptocurrency space? To find out, we posed this critical question to Grok, an artificial intelligence known for its direct and unfiltered perspectives. The AI laid out a series of bold strategies, some blurring the lines between courage and recklessness, offering a stark contrast to conventional investment wisdom. While Grok emphasizes these are for informational purposes and not financial advice, its insights provide a fascinating glimpse into unconventional wealth-building tactics. Grok's initial recommendation is not for the risk-averse, leveraging cheap debt to acquire Bitcoin during market downturns. This high-wire strategy involves utilizing low-interest personal loans, home equity lines of credit, or 0% introductory APR credit card offers. The bet is that Bitcoin's annual appreciation will consistently outpace the cost of borrowing. This approach is reportedly widespread, with Redwood Collections noting that over 60% of crypto investments are funded through conventional borrowing. However, Grok issues a significant caution. This method can jeopardize personal finances if the market moves unfavorably, making it a strategy that demands careful consideration of risk tolerance and financial stability. For those seeking more aggressive growth, Grok points to leverage trading, specifically through futures and options contracts. This advanced technique allows traders to control larger positions with a smaller amount of capital, amplifying both potential profits and losses. Grok suggests that skilled traders can strategically short Bitcoin when it appears overbought and go long when fear grips the market, often employing leverage ratios of 5x to 10x on platforms like Bybit or Deribit. PrimeXBT data indicates that leveraged trading offers higher risk and reward, but it also warns that margin calls can lead to magnified losses. Grok's Stark assessment is that 80 to 90% lose, underscoring that this strategy is primarily suited for quantitative professionals with a deep understanding of market dynamics and risk management. While Bitcoin mining might seem like a relic of the past, Grok insists it remains a viable path to profit, particularly for those who can secure access to cheap electricity. Mining operations utilizing application-specific integrated circuits, ASICs, in locations with low energy costs, such as areas with stranded natural gas flares or abundant renewable energy sources, can maintain profitability. BitBo reports that Bitcoin miners generate approximately $20 million worth of Bitcoin daily. However, the high cost of specialized hardware means that the space is largely dominated by professional miners with substantial resources. Cointelegraph also highlights that current profit margins for Bitcoin mining are quite tight, making efficiency and cost control paramount. Beyond simply holding Bitcoin or engaging in trading, Grok suggests a more integrated approach: building a business within the Bitcoin ecosystem. Launching a Bitcoin-focused startup can offer unique profit streams and opportunities for growth. Data from Bitcoin Magazine reveals that Bitcoin-native startups have attracted nearly $1.2 billion in funding between 2021 and 2024, indicating robust investor confidence in the ecosystem's development. Beta Broker notes that while crypto businesses can be highly lucrative, success hinges on possessing proper knowledge and a well-defined strategy. This path involves contributing to the network's infrastructure, developing new applications, or providing essential services, thereby capitalizing on the overall expansion of the Bitcoin economy. Ultimately, Grok's advice paints Bitcoin as a multifaceted asset with diverse avenues for wealth creation. However, each path is laden with significant risks. The AI stresses the importance of understanding one's personal risk tolerance and adhering to the golden rule: never invest more than you can afford to lose. Consulting with a qualified financial advisor is also recommended to navigate these complex strategies and ensure alignment with individual financial goals and circumstances. From the intricacies of AI-driven investment strategies, we now turn our attention to a monumental development in the global adoption of Bitcoin. Prepare for a massive revelation as we uncover a sovereign nation's significant stake in the digital asset. UAE's $700 Bitcoin bet, sovereign wealth in the digital age unveiled. In a landmark development that signals a new era of institutional and sovereign engagement with digital assets, on-chain analytics firm Arkham Intelligence has uncovered substantial Bitcoin holdings linked to the United Arab Emirates, UAE. Valued at an estimated $700 million, these holdings are associated with Citadel, a prominent Bitcoin miner majority-owned by the UAE Royal Group through its investment arm, IHC. This revelation marks the first public disclosure of sovereign-linked cryptocurrency assets, positioning the UAE as a strategic investor, hedging against economic uncertainty, and bolstering Bitcoin's legitimacy as a global store of value. Arkham Intelligence's meticulous on-chain analysis has brought unprecedented transparency to the cryptocurrency market by identifying specific wallet addresses connected to Citadel's mining operations. These wallets are confirmed to hold a significant amount of Bitcoin, directly linking the UAE government's investment strategy to the digital asset. The announcement, made via X, formerly Twitter, offers a rare and valuable insight into the scale of state-controlled crypto assets and their potential influence on market dynamics. This move by the UAE aligns with its broader agenda to foster a favorable regulatory environment for crypto businesses and establish itself as a hub for digital innovation. By leveraging Citadel's mining infrastructure, the UAE is not only accumulating Bitcoin, but also solidifying its position as a key player in the global cryptocurrency ecosystem, potentially encouraging other nations to explore similar strategic investments. The role of on-chain analytics platforms like Arkham cannot be overstated in this context. By employing advanced data science techniques, Arkham was able to trace the flow of Bitcoin from mining activities to specific wallet addresses, effectively bridging the gap between the pseudonymous nature of blockchain transactions and the identification of real-world entities. This level of detailed tracking provides invaluable insights into the behavior of institutional and sovereign investors, enhancing transparency and potentially accelerating the broader adoption of digital assets worldwide. As on-chain analytics technology continues to mature, it is expected that more revelations about large-scale, state-affiliated holdings will emerge, further demystifying the cryptocurrency space and building trust among traditional financial institutions. The implications of the UAE's $700 million Bitcoin stake extend far beyond mere transparency. It signifies a growing trend among sovereign entities and major institutions to view Bitcoin not just as a speculative asset, but as a strategic investment and a hedge against global economic instability, inflation, and traditional financial system risks. This strategic allocation of capital by a nation-state lends significant credibility to Bitcoin's narrative as a store of value, akin to digital gold. As major financial players increasingly integrate digital assets into their portfolios, the UAE's proactive involvement serves as a powerful endorsement, potentially reshaping global economic landscapes and influencing the trajectory of cryptocurrency integration into mainstream finance. Looking ahead, the increased visibility into state-backed crypto holdings, facilitated by advanced analytics, is likely to encourage other countries to adopt similar investment strategies. The transparency provided by platforms like Arkham can serve as a catalyst, reducing the perceived risks and stigma associated with digital assets for other nations. As governments worldwide contemplate the role of digital currencies in their economic strategies, the global regulatory framework for crypto is expected to become more structured and standardized. This evolution promises a more stable and predictable market environment for Bitcoin and other cryptocurrencies, attracting further innovation and investment. The UAE's transparent disclosure of its Bitcoin holdings serves as a crucial case study, demonstrating how strategic investment, coupled with enhanced transparency, can significantly drive the growth and maturation of the digital asset space. And that wraps up our deep dive into today's most impactful stories. Before you go, let's hit you with a quick recap of everything we covered. What a ride through the world of Bitcoin today. We've seen hidden signals in daily transactions, explored the surprising link between Bitcoin and craft beer, got unfiltered advice from AI on getting rich, and uncovered a massive $700 million sovereign Bitcoin stake by the UAE. Don't forget to like this video if you found it valuable, subscribe to Bitcoin Bulletin for all your crypto news needs, and hit that notification bell so you're always in the loop. Also, drop a comment below with your thoughts on today's stories and follow us on all our social channels to keep the conversation going. We'll see you in the next one.